Guys, I have an honest question for you. Like, why are people so terrible at investing? And what do I mean by this? Well, if you take a look at a stock like Tesla, for example, right? Why, when the stock is at 140 and you ask if there are people that are willing to buy it at 140, people will say, no, I'm waiting for 100. If it gets to 100 like it was last year, if it got to 101, you'll get people that say, I'm waiting for 65. Why is that? And why do then, once Tesla is in the 190s, close to 200, you start getting a wave of buyers? Why is that? As a trader, let me tell you that investing is quite literally the easiest thing you can do in the market. Not trading, but investing. All you have to do is identify a stock that is too cheap to ignore, buy, and sit on your hands. Now, too cheap to ignore can be viewed in a bunch of different ways, right? There are different ways to evaluate a stock. I'm not even talking about the complex ways in which to evaluate a stock. There's about six popular models on how to identify whether a stock is cheap or not, and sure, you can use those. But I'm not even talking about that. Just from an idea perspective, right? When you look at the Mag 7 stocks, we're talking about Apple, Google, Meta, Amazon, Microsoft, obviously Tesla, and Nvidia, right? 6 of those 7 stocks have already had their first AI wave or their first boom based on what the market perceives as the future, which is AI. Apple made all-time highs, Nvidia obviously all-time highs, Microsoft all-time highs, Meta made all-time highs, Google made all-time highs, Amazon made all-time highs. Now, unless you're telling me that Tesla is just a car company, or, unless you're telling me that it has no component in AI whatsoever at all, then okay, fine. You could say that Tesla should not be in that same category, should not even have its own wave of AI tailwinds, right? But aside from manufacturing cars, their entire company is based on an AI and robotics future. So as Tesla is now nearing $200 and people are starting to talk about it again, and for some reason, investors are excited about Tesla at 200 more so than they were excited about Tesla at 140. In this video, we're going to be talking about Tesla and why, in my view, Tesla is an easy double up in the mid to long term. So without further ado, let's get right into it. So the last part of this video will be surrounding the technicals. So I will be discussing the technicals and potential trades, as well as trades we've already taken during the last part of this video. So as I stated before in my previous Tesla videos, right, the challenges that Tesla is facing with regards to its vehicle component, let's leave the AI part alone. With regards to its vehicle component, these are not unique challenges. These are challenges posed by, obviously, extremely high interest rates, and that is relative. They are not high compared to 40 years ago, but they are high for the modern day. So caused by extremely high interest rates, obviously, there is going to be a cutback in luxurious spending or spending of high-ticket items. You're going to see a cutback in the purchasing of houses, the purchasing of cars. That is what high interest rates are meant to do. So, as I said before, there will be a shock, and we already have seen a shock to the stock price based on the fact that it missed Q1 deliveries and is likely to miss Q2 deliveries. But like I said, those challenges are not unique to Tesla, right? The market can digest that. The market has agreed that Tesla's valuation was too high at one point, dropping it all the way to a price of 140 as of this year. It was 101 last year, but 140 as of this year, and partly or mostly due to the fact that the market expected a slowdown in Tesla's car division. However, even with that included, if you look at their deliveries are much higher than they were a couple years ago or even 3 years ago, when Tesla's stock price was much higher than this. And by the way, follow this account on X. It's AJ or at Alojoh, Alojoh. This guy or girl, I don't even know, supplies a wealth of information with regards to Tesla delivery estimates, selling prices, trends, etc. Now, another thing that hurt Tesla's stock price was the fact that it dropped the average selling price of its vehicles. Obviously, it did that in order to stay competitive in the market, because if rates are a lot higher, then in order for Tesla to maintain some sort of consistency with their sales, they're going to have to bring down the actual sale price to make up for the higher interest. That was actually an extremely smart move, especially when we're talking about cars that are basically computers. And these computers can be sources of revenue for any sort of software-based, FSD-based, AI-based technologies that Tesla can sell as a subscription. And if you look at their service and other revenue, it is actually at the highest that it's ever been in Tesla's history. This is great news because especially for those of us that don't view it as just a car company, where it is building out these other segments of its business, the fact that its service and other revenues have increased to all-time highs and are trending upwards for the last couple of years, at least according to this chart, this shows that it's not just about vehicle sales or average price per vehicle. Now, this includes sales of used vehicles, non-warranty after-sales vehicle services, body and parts, paid supercharging, vehicle insurance revenue, and retail merchandise. Now, if we include leasing and credits, their automotive margins at 18.1 is still above the industry average, right? So it's bad, quote unquote, compared to Tesla's historical margins. Obviously, this has to do mostly with the car price, right? The average price of a Tesla vehicle, which, like I said, they had to drop in order to make up for higher rates. Now, what'll be interesting is to see where their operating cash flow is, because their operating cash flow driven by inventory normalization. If you take a look at March, right, Q1, this was brought down by 94% from Q4 of 2023. However, as you can see here, it says operating cash flow decreased in Q1 2024 primarily due to inventory decreases from a mismatch between builds and deliveries, and elevated capital expenditures across various initiatives, including AI compute. We expect the inventory build to reverse in Q2 2024 and free cash flow to return to positive again. This was said by the CFO during their last earnings call. So all that is to say is that their stock price absolutely took a hit from trading summer of 2023, and I'll get to why summer is actually important. This is part of my thesis. But summer 2023 trading at 300 all the way down to 140, obviously. But all of these things are now priced in my opinion. All of these things are known. The headwinds with regards to the car industry, the fact that Tesla had to drop its prices but still remains one of the best-selling cars. So what has not been talked about? Like I said, Tesla is part of the Mag 7, right? What narrative has not been talked about that you are starting to hear now, which was my prediction for the stock months ago when I said that you are going to start hearing this specific narrative. And the narrative has to do with AI. Google, Microsoft, NVIDIA, obviously, Meta, Apple, which I also talked about in a separate video, that its AI wave is coming. And it actually has, now breaking to almost $220 all-time highs. Amazon, not sure if I said that one yet. And then Tesla. Tesla's the only one in the Mag 7 where the AI narrative has not yet been discussed, at least in preliminary detail, with regards to its future. And we all know that Elon had tweeted out in August that robotaxi, he tweeted out a date in August and said robotaxi with the date, right? We don't know if those are updates on robotaxi or whatnot, which I suspect it will be some sort of, AI conference with robotaxi as the center topic. And we also started seeing articles talking about Tesla on a new hiring spree after firing 10% of its workforce. But it is now hiring quite a few heads in the AI and robotics division to handle all this stuff. So here's why I think Tesla's stock price can easily double from here. One, the obvious, I guess, conclusion that people will draw, even if you don't know anything about Tesla or the stock market, is that Tesla's stock price was already trading at double, right? But trust me, that's not why I think it will trade eventually at double from the price that it's currently at, which is almost $200. The fact that Elon Musk won his Tesla pay package means that he is now incentivized to stay at the company and continue to build its AI divisions in-house when he was threatening to leave if that pay package was actually not approved. But as I stated before, you could see, if you follow me on Twitter, by the way, follow me on Twitter for free daily trading and finance content. You can see my many tweets talking about this. My thesis is that this rallies into the summer riding FSD robotaxi announcements. Like I said, you don't have to be a genius in order to invest. You just have to have a good sense for where is the trend going? And if there's a clear beneficiary that is trading at a discount that could eventually ride that trend, it's on us to identify those asymmetrical bets, right? And to me, Tesla was too cheap to ignore in in that context, right? So now we are starting to see these articles saying AI and robotics are the keys that will drive Tesla to a $1 trillion valuation, Wedbush says, right? And even here in articles that talk about the AI robotaxi business won't be easy, let's take a look at some of the valuations for just the robotaxi side of the business, right? Obviously, you have crazy Cathie Wood, who believes that it's worth $5 trillion plus by end of this decade. However, if we look at more sensible people like Morgan Stanley analyst Adam Jonas, he values Tesla's autonomy and software at roughly $500 billion. RBC's Narayan values Tesla's robotaxi business at $414 billion, down from $627 billion. So roughly in the $500 billion sense, right? But if we take a look at what Tesla's current market cap is, you could see here that even after the recent price pump, Tesla's current market cap is $615 billion. So just the robotaxi side of things, right? If we look at a conservative or I guess an average valuation, Tesla's robotaxi business is almost as big as Tesla is currently. And that's not including the FSD business, right? The FSD business that could easily be licensed to other car companies. Remember, Tesla has been at the forefront of collecting all of this driving data because they've had, cameras installed in their cars for over a decade, collecting thousands and thousands of hours of driving data. And this is why their FSD software currently is a leader in the field. Now, obviously, that could change in the future. But as of now, who is the clear leader when it comes to full self-driving and potentially being the first company able to achieve full self-driving would be Tesla, right? So imagine all of the Tesla cars, obviously, that would be paying for the service. But then imagine if this becomes something that they can license to other car companies as well. So now, even on a day where it was reported that Tesla might miss Q2 deliveries, Tesla is up almost 5%. And this is where I will talk about the technical portion of this and why I think that the summer is so important. So on Twitter, I released this analysis here comparing Tesla's past 4 summers and why even during a brutal bear market of 2022, Tesla still saw a run-up during the summer. So if you take a look at 2020, right? After Q1 deliveries, you have a lull period. And then once the RSI on the daily, once the RSI hits oversold, right? And I'm not an RSI trader in terms of day trades, but I will use it for long-term analysis. You tend to see a summer run-up into its AI and in this case will be robotaxi conferences, right? 2021 is no different. 2022 is no different, right? We saw a 28% run up in the summer of 21, 50% run up during the bear market in 2022. 2023, we saw a 97% run up, right? This is when Tesla stock price hit 300. And as I said before, we are starting to see the same exact phenomenon now, which is why I alerted Tesla as a buy, not only on YouTube. I made tons of videos about it, told you guys that I was buying Tesla. Obviously, you get the regular standard ridicule in the comment section, right? But I also bought the 200 calls expiring July 19th for that very analysis, the fact that I expected a summer run-up. And today, as of the time of this recording, we sold those calls for 140%. You could see here that I bought Tesla back when it was in the 140s in April, and we are now up almost 40% on the stock. And we are now up almost 40% on the shares, which is what you would expect to get in return for 2 years in the S&P 500, and that's on the high end. It would take you 3 years at an average rate in the S&P 500 to get that type of return. From a technical standpoint, I said that we were forming a pennant here, and we were obviously coiling towards the apex. And if we did pop up, then I would entertain buying calls, right? At this point, I had only bought shares. But when we popped up and we retested this pennant, I said that I would buy calls. We retested the pennant. You could see here this huge green candle followed by 3 inside days. This was supremely bullish here, which is when I bought more calls on Tesla. And we now see this pop out of that second pennant as well. So in the short term, I do expect Tesla to get over 200. I do think that the events in the summer can act as sell the news events. I don't think unless there's something that was completely unexpected and that the delivery is imminent as opposed to something that is just on the horizon in the foreseeable future. I do expect those summer events to be sell the news events. So in the short term, I will likely take profits on most of my gains and will buy back in on any declines here. But in the long term, like I said, in my view, Tesla's AI picture has not yet been painted fully. And until the market is able to digest what that is going to look like in the future, what that will translate into demand, what that will translate into potential revenue, what is the robotaxi and FSD, what are those businesses actually worth, not to mention, robotics and Optimus, which I don't think we'll get a huge update on in the short term, but all of that stuff put together, in addition to their vehicles, obviously, it'll be interesting to see how the market starts repricing this company, because I believe that the company can easily be a double up from here. Like, it can be a $1 trillion company if you start including all of these AI services and they become much more tangible than just these pie in the sky ideas. Anyway, let me know your thoughts down below. Also, if you want to get our real-time alerts, my real-time swing options, my day trades, obviously I day trade futures, I don't day trade options, but I swing trade options, as well as my long-term stock analysis. Make sure that you join us down below. Click the link in the description. Let me know what you think down below. Do you think that Tesla is worth more than this? Were you one of the people that, thought Tesla should be valued at $10 or whatever? Let me know what you think down below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.